Morning traders, and this is your Dow Jones day trade setup for today. So we got a pretty big big move to the downside yesterday, and that has engulfed the previous 2 days. Pretty solid and closed below the low of the last 2 days. That's a fairly fairly bearish setup there. But the trend for this is still up. So yeah, it's kind of you want to be short, but you know that you shouldn't be short because there is structure here, and there's going to find some support somewhere along the line. So whenever you're shorting, you sort of shorting as a scalp rather than anything else. So there's our first level there, which we have tagged and we have not closed below it. Okay, although we've squirted below it. And remember, we're looking at this on the daily to start with. There is my next level there. This is the one that I'd feel a lot more comfortable with. It's pretty close to the 50% Fibonacci as well. And that is 28.5. Let's just say 28,500 area is what we're looking for. There's just so much happening to the left at on all the different time frames that you could be held up on pretty much anything at the moment. So you can see how the day started, well, how the week has been. It's really been all over the place. I think for now we have a pretty well defined downtrend on the 3-hour and the 4-hour at the moment. When we move to the hour, you'll see it's also pretty well defined on the hour. So if that holds, so in other words, we stay below all these moving averages that we have here, then we need to just continue trading this to the downside. Okay, the volume stepped up when we got to the bottom here. And that bottom was based on the 4-hour, which was the 200 EMA. You can see the volume here, the volume spike of the buyers coming in right here. So there's so much structure to the left here. I mean, we've got these moving averages, we've got these components here. I'm actually just going to move this out the way because you've got that inside bar there, and you've got another one further down here. So if you look to the left, look at the support that you're going to find down here. So this is the area I'd like to see us come back down into. And as I said to you earlier in the week, don't be too surprised if we come down to this area here, 28,990, because that could just form a bigger range. Okay, so that is still a possibility. This is all coronavirus fear. This 4-hour bar, inside bar here, another inside bar forming. There's a lot happening at the moment. We look at the 1-hour. We had a big exhaustion bar down to a level. The level was the 4-hour 200 EMA. Then we had the inside bar form, had the retracement, and then we had the second attempt at the downside, and then we've got an inside bar. Okay, so from a structure perspective, I'm looking for a close above 29,154. If I can get an hourly close above that, that validates my long, and that's because it'll be above the inside bar here. In the meantime, I've got inside bar, inside bar. I then have pin bar, another little pin bar, sort of engulfing bar. There's a lot of confusion. There's a lot of signals to downside, signals to the upside. And normally when this happens, we're looking for the next level. And the next level, as far as I'm concerned, is down here. Okay. So that 28,900 is what we're looking for. So we can get down to this previous daily fractional. I think that is the level that we need to be waiting for a move. So often when this happens, when you see a bullish pattern like this, and then you start seeing bearish patterns as well mixed into it, then you know that there's probably more than likely another step down. And the structure that's forming is sort of a flat bottom triangle, like that. Okay, so right now, I think same advice as what's on the South African JSE top 40 at the moment. Stick to your lower time frames. So I like looking at the 12, the 20, or the 30 with the Dow Jones. And you can see the long the moving averages are all pointing down, we are trending down. Even if we bounce above it for a bit, you're still trending down. and that would have actually got you your entry here, which, well, I missed it as well, hindsight being a perfect science. But that was purely because I wasn't interested in trading this thing yesterday. So at the moment, I think trend is down. Europe's probably going to open with a slight gap down, and then probably go sideways, to be honest. If I look at the DAX, probably go sideways, and then we're going to have to wait for the US Open to dictate what's going to go on. I think the interesting thing is happening on the Ichimoku at the moment, though, because there's a lot happening here, which is indicating trend changes. So here you can see we are trending to the downside on the 12-minute, but everything's flat, so I'm not going to read much at that. If it was pointing down or up, we'd be looking at it that way, but the 12 minutes is not really the chart to be worried about, nor is the half hour, okay, nor is the hour. You can see how everything is flat, so pretty much nothing happening there. But the interesting thing for me at the moment is we had a bullish cross here, and then we've ended up with a bearish cross, and we're now bouncing off the bottom of the cloud. So breaks down are going to give us more downside. The question is just to where. And you see we've had a twist here, so we've got bearish signal, bearish signal, bearish signal, with checker span, So we've got a couple of potential trend change here on the 4-hour, and I think we need to wait for confirmation for that. There's no confirmation yet. So at the moment, for all intents and purposes, we are going sideways and we are moving in a range. So that's the thing that I'd be looking for right now. I'm looking for a level to buy off. If we break below the next level, then I would expect a retest of it, and then you'd have the confirmation of a move to the downside. So there's a lot happening here, which is indicating potential trend change, except on the daily. The daily is just indicating a bigger range. Okay, so yeah, I think lower time frames are the way to go. I pretty much would say ignore the European Open for now, because what's been happening the last couple of days is the USA has been driving the markets, not Europe. Europe's just going sideways. So yeah, it is, you've got two choices. Take a really low time frame, even a 5-minute will work. Trade those time frames with the same rules, and you should make some money out of that. But then it also means you need to be sitting and watching the charts. You're not going to be able to sort of leave it for a morning or a day or so. And I don't think that's going to happen much through next week either. I think this confusion around the virus is going to continue for quite some time until they get it under control. Okay, so probably doesn't help the guys that are looking to put a trade in and go to work, because if you're one of those guys, then I think just take a Friday off, go have a beer after work rather. But if you've got the time today to sit and watch this thing on a lower time frame, then pick a 5 or a 6-minute chart, and you should be able to make a little bit of money on the volatility that's happening. And what you're looking for on the lower time frames is pretty much breaks above defined structure, and there's defined structure there. And you can see we've got buyers stepping in at the moment as well. Okay, anyway guys, I'm not sure it helps you, but yeah, be cautious out there. I want to see a bigger level to the downside. If we do see the level to the downside get tagged, and remember that level is pretty much not there. So that level is pretty much 28,920, 28,900, somewhere around there. That's what you're looking for. Okay. If we can get down to that level, I'm definitely a buyer, and hopefully what we should see is a pretty strong flurry of buyers coming in at that level, seeing value there. It's also pretty close to the Fibonacci structure as well, so I think that would be a good area to be buying. Okay, anyway guys, hope it helps you somewhat, and enjoy the weekend. We'll catch up with you next week. Cheers for now.